I've staked nearly $200,000 of my personal portfolio on a single thesis. Even though oil and gas production is surging in North America, the big money in energy stocks isn't going to come from the producers of all this energy. No, the real fortunes will be made by the companies those producers need in order to keep drilling and keep profiting. Without them, producers couldn't keep the American oil and gas boom going. But there is a downside to all this activity, and if you don't watch out, it could cost you a lot of money. We now produce so much natural gas, the price has dropped, and now gas producers are barely profitable. But drilling continues. I think that could happen to light oil in North America as well. All the shale oil is light oil. North American light oil prices, or WTI, are back to a $15 discount to international or Brent prices. Bakken oil producers get even less, $30 a barrel below Brent. Ouch. But drilling continues. That makes my investment choice obvious. I want to own the service companies. But not just any services company. Drilling companies, for example, are a commodity just like oil or gas. I only invest in the best companies, the ones that save producers the most money. They are now essential to the North American energy boom. These select companies prosper because, 1, their services are in continued high demand, and 2, their services have such compelling value they have customers in every major play in North America. And they profit, no matter what happens to the oil or gas price. And I found not one, but 2 such companies. They're better positioned to grow and profit than any others I know for years and years. Because the energy industry is going to drill North America like mad. And the profits to be made from it are huge. You've heard how North America will be energy independent, all because of horizontal drilling? That would be great, but I think that's a bit of an exaggeration. The continent is still a huge importer of oil, even with the surge in oil production here. Take a quick look at this chart. The blue line shows the imports. It's still happening. The United States still imports over 7 million barrels a day of oil from other countries. Yes, we are importing less oil than we used to, but we still need every drop we can find. So I'm not certain North America will ever become truly energy independent. But I am 100% certain of one thing. The energy industry is going to make Swiss cheese out of this continent over the next 10 years drilling oil and gas wells. The energy industry must keep drilling because, you see, these horizontal wells produce at high rates for only a very short period of time before declining very quickly. This chart shows an example from the Bakken oil formation. See how steep a drop production falls off. That means it takes thousands and thousands of wells to drill each horizontal oil and gas play. Trust me, drilling will continue for years at a breakneck pace. This is going to be an unprecedented drilling era. Look at the huge number of plays that are getting drilled now in North America. See all that red? That's a lot of shale plays. There's the Bakken, the Eagle Ford, the Wattenberg. But what will all that oil production do to the North American oil price? Remember, it's against the law to export crude outside of the USA. I think all that captive new supply means a lower oil price, which would mean lower stock prices for producers. On May 14, 2013, the International Energy Agency, or IEA, released its Medium-Term Oil Outlook Report and described a North American oil supply shock that is set to ripple through the global oil markets. The IEA projects that North American oil supply will grow by 3.9 million barrels a day from 2012 to 2018. That's a lot more new supply. Producer profits may decline, but history says drilling will continue. Several natural gas plays continue to increase drilling despite very low gas prices, like the Marcellus and the Utica. This oil boom reminds me of the California gold rush era. During the gold rush, it wasn't the gold prospectors who got rich. It was the merchants who sold the prospectors the picks and shovels required to do the prospecting. My two companies, the top picks in my portfolio right now, supply the modern version picks and shovels role in the energy industry. But these service companies are a lot more high-tech, and demand for their services is increasing not every year, but every quarter. But even if oil and gas prices were high, which of the many oil plays would you choose to invest in? Wouldn't it be better to get exposure to all of them? Sure, but that would involve a different stock for each play. So why not get exposure to all of them at once? That is what my two current favorite companies offer. These companies operate in all of the major oil and gas plays in North America. These companies will continue to increase profits no matter which of the plays turn out to be best. The more wells that are drilled, the more money these companies make. Let me get back to my main point. You now understand that energy services is the best investment in the North American energy boom. Nobody can guess commodity prices. The only sure thing in energy right now is that a lot more drilling will continue. Now I'm going to tell you the best two service companies in all of North America, the very best. They are unique in the mid-cap space. They have technology and business moats around them that act as barriers to competition. They're growing fast, they're profitable, and they save their customers, oil and gas producers, a lot of money. One is an innovator, developing new products and services that reduces well costs by over $1 million. That's anywhere from 10 to 25% on a well. The other has a business model doing all the mucky work around oil and gas extraction. And they do it so well, they are being pulled into new oil and gas plays across North America. They're each small enough to offer huge leverage and large enough to dominate their competition. They aren't behemoths like Schlumberger or Weatherford that already make billions and billions of dollars. For big global players like them, the North American drilling boom will be a nice ride, but it won't double or triple profits. These big companies don't offer enough leverage to this trade. My subscribers expect me to find companies that can double, triple, and more. My two favorite companies are small enough to offer maximum leverage to the North American drilling boom. 5 or 10 years from now, these companies could have profits that are multiples of where they are today. When profits go up that much, so do stock prices. But while these companies offer leverage, they aren't tiny little microcaps either. These companies are the only two medium-sized players in their niche. They are the perfect size for this opportunity. These two companies I have identified are the best two energy service plays for the next decade. These two companies are in the sweet spot for shareholders. Look, I love investing in oil and gas producers, and I always will. Most of my triple-digit stock wins have been oil and gas producers. But these two service companies are the easy money in the North American energy boom. Oil and gas producers always have to worry about commodity prices, which means I have to worry about that too. And I think the light oil price could drop now. It is dropping as North American oil production surges. And that is a major risk for oil and gas producers, many of which often carry a lot of debt. These two companies don't have to worry about that. They don't have to worry about whether oil is going to go up or down by $10 a barrel 6 months from now. These companies are going to make money in every part of the commodity cycle. Yes, they will really mint money if oil is $110 a barrel and drilling is going at an all-out clip. But here's another very important reason that these are the best energy services stocks. These companies make money through the entire life cycle of an oil or gas well. Remember, the actual drilling of an oil or gas well only takes 20 to 30 days. Once drilled, oil and gas wells produce, though, for the next 30, 40, even 50 years. And over that long period of time, the well needs constant servicing to maximize production. My most recent subscriber picks offer products that are used over the entire 30 to 50 year life of a well. That insulates these companies from the ups and downs of the commodity price cycle. That is a better business model and a hat trick of an opportunity, growth, yield, and security. But my favorite thing about these two companies is the huge growth that they have ahead of them. Growth is what is behind all great stock winners. And these two companies have that. And these companies offer diversification. They operate across all of the major plays in North America. That protects an investor in these companies from downturn in one single play. And they have a large customer base. That protects an investor in these companies from one single customer running into problems. These companies have rock-solid balance sheets, which gives the companies staying power in all market conditions. Plus, both companies offer growing dividends that provide income for investors each and every quarter. Since 2010, one of these companies has increased its dividend 8 times. The current dividend is almost 3 times where it was 5 years ago. My subscribers have already enjoyed one big move in the stock. But this company is just getting started. A new acquisition is creating huge revenue jumps right now. The next 5 years look even better as the horizontal drilling boom kicks into full speed. The second of these companies has been publicly traded for just under 4 years. Over that time, the stock has moved up steadily, then consolidates. It is now starting another move up. So how can you get started with these two winning stocks? Let me rush you a risk-free copy of my new research on each company. Take the time to read through each and then decide if it's right for your portfolio. Then take the next 30 days to review my entire personal portfolio, including my top 5 trades. You'll also see every one of my positions, open and closed, and have access to every subscriber report I've ever published. That way, you'll get a good sense of how I run my service and if it's a good fit for your own portfolio. And if at the end of 30 days you decide to part ways, I'll refund you every last cent of your quarterly subscription. We are in the early innings of a boom, and these two companies are just getting started. Click the order button now to learn more and get started. Kind regards.